50-year mortgage. What are the pros and cons? Why would somebody go for a 50-year amortization? And does it make sense? Hey guys, it's Mortgage Mel, and it's time for today's Mortgage Minute. Right off the bat, the appeal of a 50-year is that it amortizes over a longer period of time and lowers the monthly payment, thereby making the monthly payment more affordable. The immediate drawback to that is that it almost doubles the amount of interest that you'll be paying over the life of the loan, assuming you keep it. Let's take a deeper dive. The slow equity build would make trading up almost impossible. It would take almost 40 years to pay off only half the balance. And that means most borrowers would not build meaningful equity until the last decade of the mortgage. The other thing to note, and that is the shorter amortizations like a 15 or a 20 year are usually a lower rate than the 30 year. So the assumption would be that the 50 year would be a higher rate than the 30 year fixed. Let's take a quick look at the math. Assuming for the sake of argument that mortgage rates were equal across both products, a 50-year mortgage would lower mortgage payments by about $250 per month on a $400,000 home, assuming 10% down and a 6.25% mortgage rate. Total interest payments over the life of the 50-year loan would amount to $816,396 compared to $438,156 on the 30-year loan, a difference of $378,240. That amounts to 86% more interest over the life of the loan. After 10 years of homeownership, you'd have only 14% equity stake in your home with the 50-year loan compared to a 24% stake on the 30-year. In short, this product offering may give you a way to enter the market with lower monthly payments and in many cases provide a better long-term outcome than renting, but they would require a clear strategy to refinance or sell once the home appreciates in value. Final issue here is that housing affordability has less to do with the product offerings of mortgages and more to do with shortages of housing. And so if you're adding more people into the market with a 50-year fixed versus a 30-year, now you're going to have even more competition for homes, and that will drive the housing prices even higher. I hope this information helps. If it does, give me a like and a follow, and I hope you have a great day.